Welcome back to Finance News, the only news show where we all gather together in a room with cake and champagne, but we don't call it a party. At least that's what I'll be putting on my police questionnaire at the end of this video. As always, let's get straight into the headlines in business, investing and the stock markets from the US and back here in the UK. Let's go. US inflation numbers came out this week at 7.5%. The record levels have not been seen since the 1980s and show a less than transitory increase in the cost of living compared to the previous 12 months. The price rises from the Consumer Price Index, which collects data from many different areas of the economy, found that food, electricity and the cost of shelter were the largest contributors to rising prices, with food leading the way with 0.9% alone against prices just 1 year ago. Even after stripping out food and fuel, inflation still climbed to 6%, and a nationwide shortage of used cars also continued to drive the rise. Used car prices were 40.5% higher, which may mean that it's time to sell that old rust bucket. But then you'd have no car, so you'd have to probably buy a new one anyway, so maybe don't do that. The Federal Reserve has signaled that it intends to raise interest rates at its meeting in March in an effort to dampen spending and bring down prices. As confidence weakened and investors panicked, US Treasury bond yields popped over 2% for the first time since August of 2019. 10-year bond, which is inversely correlated to its price, showed a spike above the double percentage point mark as investors looked elsewhere to park their money. They're probably going all in on Spider-Man NFTs. The impending Ukraine-Russia conflict combined with the high inflation data also sent stocks tumbling on Friday as some major tech stocks had a bit of a wobble and started trading like penny stocks. Companies like AMD and Nvidia both saw a large chunk of their cap wiped off on Friday, including 5% off everyone's favourite stock, Tesla. The bears are back in charge, everyone. Disney soared this week when it announced its numbers from its Q1 results. The popular theme park, movie and streaming service provider impressed investors with its Disney Plus subscription numbers and park visits. The home of Mickey Mouse grew its subscriber streaming service by 11.8 million to a grand total of 129.8 million subscribers, beating expectations by more than 3 million new heads. Notably, that's 3 million more subscribers than even Netflix managed to add last quarter. Go Disney. Parks, Experiences and the Consumer Products division doubled its revenues from $3.6 billion last quarter to $7.2 billion this quarter, showing that consumers were back spending money outside of their homes, in the parks and on cruises as well. Anyone heading on holiday into the half-term break, I salute you. Mickey Mouse and co will gladly put their hands in your wallet and drain it of all funds. Have fun.
Yeah, no, just stop.
In the crypto world this week, the US Department of Justice has seized $3.6 billion worth of cryptocurrency that was stolen and laundered through various exchanges across the internet. The recovered funds are alleged to have been stolen by cryptocurrency couple Dutch and Crocodile, also known as Heather Morgan and Ilya Lichtenstein, who may have played a key role in the hack of major cryptocurrency exchange Bitfinex in 2016, where nearly 120,000 Bitcoin was stolen. The security services had managed to track the hack back to the couple after they had allegedly tried to hide their movements by laundering the currency through multiple exchanges, swapping the heisted funds through various different kinds of currencies, but they still managed to submit their own user details, it seems, and use the same photos when submitting customer information that is required on certain legitimate marketplaces. If you ever see me doing a rap video through the streets of New York around Wall Street, please call the authorities and have me sectioned immediately. Could be great content though. Maybe a video for another day? Driving swiftly on, a rideshare and delivery giant Uber announced its results this week to the street, but was not met with huge enthusiasm, as although the company increased revenues, it's still yet to make an overall profit and continues to bleed money. The company, which started as an app-based taxi service, now delivers food and smaller delivery items to customers all over the world. Revenue grew over year on year more than 83% to $5.7 billion, beating last year's results at $3.1 billion, and adjusted EBITDA did show positive numbers, but that's all just smoke and mirrors to make the company look better than expected. At least they burnt less cash from operations. In 2020, the company zoomed through $2.75 billion compared to just $445 million in 2021. One day they'll be profitable, imagine that. Back here in the UK, even after all of the doom and gloom from the States, funnily enough, the FTSE 100 did manage to squeeze out a small juicy green one for us. Sorry if you're just trying to have your breakfast. The UK's flagship index managed to climb almost 2% last week, even after a slight wobble on Friday, continuing the charge showing that the UK stocks are suddenly back in fashion. Leading the way were Unilever up 135p, British American Tobacco up nearly £1, and Evraz up 13p. In other surprisingly good news, the UK economy grew 7.5% last year, its strongest growth since the Second World War, thanks to the rebound from post-pandemic lockdowns. According to the Office of National Statistics, it was the biggest rise in 80 years since 1941 and meant that the UK also posted the fastest growth in the G7 after a 9.4% fall in GDP back in 2020. It beat growth in the US, which came in at 5.7%, France at 7% and Germany at 2.7%. However, the economy is still 0.4% below the pre-pandemic levels. Oh well. Sticking to that downside, more data from the ONS shows that the UK exports fell to the EU by £20 billion last year. The ONS compared trade performance against figures from 3 years ago, because that was the last year before distortions caused by firms stockpiling ahead of Brexit and the lockdowns. Despite the disruption, the EU remains the UK's largest trading partner. However, for the first time since comparable records began in 1997, the UK now spends more importing goods from the rest of the world than it does from the EU. One interesting story from the continent saw car maker Mercedes-Benz show off its profitability. In a trading update, the German automaker said that returns on sales of its vehicles would hit 12.7%, with the final quarter of the year hitting nearly 15%, which is the highest ever on record. The additional earnings came in after the company had to increase prices to deal with supply chain shortages and the low availability of microchips used in their production. Mercedes said sales for the year are expected to fall 5% to 2.1 million vehicles, but its performance was boosted by rising prices as it prioritized its highest-end vehicles to receive computer chips. Apparently, sales of its fancy Mercedes Maybach limousines are up 51% to 16,000 cars, mostly driven from demand in China. Finally, this can't be finance news, but at least one random interesting news story of the week. The Wall Street Journal this week reported on a story from a university in Israel about researchers letting goldfish take to the wheel and get behind their own vehicles. Or at least something like that. This viral video that Ronan Segev tweeted last month shows a goldfish driving a water tank equipped robotic vehicle down the side of a street and inside the lab at Ben Gurion University of Negev in Israel. The Finding Nemo style escapade was part of a scientific study to test whether goldfish had the mental acuity to navigate a terrestrial environment toward a target using a machine. You'll be glad to know that the 6 goldfish that took part in the driver's training all passed their test. The reporters go on to add that Dr. Segev, a neuroscientist who's been studying fish cognition for 16 years, didn't hold back on the menu of challenges he devised for the goldfish. His aim was to show that animal brains aren't inferior to human ones, they're just different because they evolved in a different environment. Now, if only you could work on some of the brains of our politicians, that might be very helpful. No IPOs of note to talk about this week, so we'll head right over to the section of news where we get to poke fun at some of the more stupid decisions that people make place in the wonderful world of business and finance. I'm always grateful for people being stupid. Please don't change. Just when you think it couldn't get any worse, fails of the week. In this week's fail, the stock market darling of the pandemic, Peloton, who shot to fame through its home-based exercise bike subscription service, has taken a bit of a beating from staff after it announced it was firing 2,800 people as part of its cost-saving exercises at the company. See what I did there? Exercise. The outgoing CEO announced that a meaningful severance package would include a year-long subscription to the Peloton service. How kind is that? I can already see the instructors at home giving the newly laid off staff a big shout out saying, "Come on John, stop sitting on your ass and get on those pedals." As staff anger grew, in a Zoom call introducing the new company CEO Barry McCarthy, former staffers managed to get on the call and write, "I'm selling all my Peloton apparel to pay my bills." Another wrote, "This is awfully tone deaf." And finally, the company messed up by allowing people who were fired onto this chat, adding that it was now too late to moderate it. The outlet reported that McCarthy said he had no comment after being asked toward the end of the discussion whether laid-off workers had been allowed into the chat. Peloton's share price is around $34, down 77% for the year. This company really needs to get on their bike and start moving again. After that awful attempt at a joke, let's now slide over to the house favourite section, all of the best memes and funny bits from Reddit's WallstreetBets. Welcome to the best of the bets. It seems so long ago, but do you remember the time that we thought inflation was transitory? And we just kept kicking that can down the road. Turns out it might be here a little bit longer than we expect. This one's good. Remember that there's always a good time to bury bad news. Just get some more bad news and point the camera in that direction. Well played, Mr. Powell. Well played. You got lucky this time. Here's maybe what a Discord chat might look like for billionaires. This one needs no commentary. Let's enjoy this one together. Anyway, that's all we have time for. Thanks so much for watching. Drop me a like if you've enjoyed it. Subscribe for many more. I'll see you in the next one next week. And as always, happy investing.